Good morning, traders. It's 8:01 a.m. Chicago time on Friday, the 6th of April, 2018. Thanks for joining me again. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. It is non-farm payroll Friday, unemployment Friday. In case you were not around, the unemployment rate came in at 4.1%, better than the 4% expected. Well, worse than the 4.0 expected. And non-farm payrolls came in much worse at 103,000 versus 185,000 expected. In addition to that, we have comments from the China Commerce Ministry stating that it will not hesitate to retaliate on additional tariff measures taken by the U.S., and they will wait until the list is published by the U.S. government in order to hit back. So this is front and center. Really, it's been for about a week and a half or so, and it continues to do so. So just keep a close ear or eye on news. The overall market disposition this morning, news last night of the U.S. imposing tariffs on 108 products, or $100 billion worth of tariffs, caused a drop of about 20 points. The market ended up testing, the S&P ended up testing 2619.75, which just happens to be a key area. It held there, and it's trading 2642.25 below yesterday's range this morning and into the rally day range. So expecting more fireworks this morning. But overall, the equities are lower, and allocations to safety. The U.S. bond is up 0.3% of 14 ticks. Gold is up $3.40, up 0.26%, trading at 1332. So the laggard is the NASDAQ this morning, down 55 points or 0.83%. As far as what other news could impact us today, we have consumer credit in the afternoon at 3 o'clock Eastern, 2 Central. Not expecting that to be a mover. And so that's where we stand. Let's take a look at what we expected yesterday. Before we do that, I want to remind you, it is Like Friday. Please make sure that you hit the like button before you take off today. I'd really appreciate it. If you don't see a like button, just press the YouTube logo at the bottom right, and it'll take you to the YouTube streaming page, and that's where you hit the like button there. I'd appreciate that. Here's the primary scenario from yesterday. The market was we were looking for a gap up on the market. Open on the ES. We were trading around 26.60 quarter, above the 26.49.75 high of the prior day, a rally day. And the expectation is that the market's likely to open out of range in an auction down and find buyers. I was looking for buyers in the 26.54.50 area for an impulse up, and the target would have been 26.76. The prior weekly high. That's the key trade of the day. Is an entry on or around 2660 for a 76 target. So 16 points. Risk on that would have been around 4.5 points. And so that's the primary scenario. The secondary scenario is that the market quickly, it opens up and quickly tests or early test overnight high at 2667 and drops into the prior day's high, consolidates at the prior day's high in the 26.49.75.50 area, and then potentially tagging 26.44, the point of control. Here's what actually happened. Let's kill this. It's so funny. This works fine until I'm in the trader bite. Let's get rid of this. All right. So what happened yesterday? We open up what looked like an open auction. We test down to 26.56.75. We test up to 26.62.75. And then we drop. We start to fill the gap. So the opening swing is just that, 26.56.75 to 26.62.75. Let's walk through this. Okay. So keep your eye on this here. So we open and we have a nice clean opening swing, down, up, down. So far we see that both sides are active, and it's a pretty tight range. So we're not seeing the higher time frame or aggressive buyers or sellers stepping into the market yet. And as we continue on, we see that we are starting to sell off. We have a 9.5 point rotation into the gap zone below the opening swing at 56.75. And so we are in scenario 2, expected to be in scenario 2. We are basically doing this part here. So I'm looking for a short into the prior day's high and managed to pull that off. Looking for a test of at least 26.50, 49.75, and of course a breach of the prior day's range. This is against the gap up on a trend up day. So I know for those of you who are part of Convergent, we covered this in depth yesterday in the anatomy of a trade, and the market gets down to 26.51 and it turns around, gets to the mid, and is not able to hold. That cancels scenario 2 out. We left a small gap beneath us here between 51 and 49.75, just a point and a quarter. And then we start to push through the mid, which cancels that the short side out. And we're looking for scenario 1. Again, scenario 1 is looking for a push into 26.76. We're looking for an impulse up. This is the impulse up right here, right there. That's big line, an impulse up. And when that happens, we're looking for the pullback in the direction of the trend. And it just consolidates, 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 consolidates. And it's compressing nicely. And it suddenly has a nice explosive move up. Boom. There's the impulse move up as expected on the plan. So let's turn these back on. So we are pushing towards some key areas above, the biggest one of which is 26.76. Gets to 72, 72 quarter, and then it just drops. It's not able to push through this stock zone at 72, and it gets back into the initial balance for a neutral day. So it ends up going neutral. It ends up tagging the prior day's high, like we had on scenario number 2. And so now we're watching again. Scenario 2 gets back up front. Scenario 1 gets pushed to the back. And we're looking for a mid hold. There's your mid hold, and it breaks through again. So very twisty day. Gets to 72 again. We have what is now it was a weak high all the way back here. It was a weak high, but then we came back and made it even weaker by not taking it out. So we have basically a triple top separated, sufficiently separated now, and it's a big target. That 26.72 is a big target for next week, and maybe even today if we get some more tariff type news. So that's where we are. And in the overnight session, so the point being, yesterday we played both. We started with scenario 2, jumped quickly to scenario 1, switched back to scenario 2, jumped back to scenario 1, and it's back and forth, kind of a trade. Neutral day and closed neutral middle. This is what's happened overnight. The scene of the crime for the U.S.-China tariff news is 26.6150. 26.6150. That is the price the market is expected to revisit on this on the next push up, and that brings us into line with yesterday's trading. So since the news happened, we pushed to 2619.75, 2619. The 2619 areas is quite important. There, consolidated here, and it's just a price that's been tested over and over and over, and it held yesterday again. And as I was talking yesterday in the Convergent chat room, this very, very bullish setup, in my opinion, since it is based on news and it's quite a dramatic move, with Delta immediately going positive. So what you have here is a negative Delta on this massive bar, okay? And look at what happens immediately after. Boom, boom, boom. Huge Delta comes in. Much bigger Delta. Big opportunity for buyers here. Big Delta, and it's positive all the way through. And the market's likely to drift up, is likely to continue drifting up. This is what it looked like on Bookmap. So as we pull in, there's the big drop. Okay, there's the big drop. Massive drop, and then it starts to bounce around, higher low. Really good CVD, good delta, cumulative volume delta, really good CVD here, and the expectation is it continues to drift higher, and so it's it's a pretty, it's hard to get in this market. It's hard to get something that is so clean. But there it is. So we're starting to drift up. The non-farm payrolls came in and knocked some things down. The SOC for the non-farm payrolls is 2642. Again, the scene of the crime is 2642. We're looking for that price to be tagged on the open. The non-farm payrolls had an immediate reaction, high of 2646 and a quarter, and an immediate reaction low of 2636. So a 10-point range on the release, and it's just it hasn't really done anything or gone anywhere. So that's the non-farm payroll right here. It's this line right here, and well, yeah, that candlestick needs to be switched to white on the boundary, but we're still trading this range, and it's not really going anywhere. So on the overnight, well, let me bring that back. On the overnight, the profile is really difficult to read because of the repricing on that news, but mostly there was a ton of buying down here. Look at this. That's a lot of buying at one price. At 26.25, tons and tons and tons of buying, and this is where the delta got strong, and then since then we've been in this complete balance all the way up to 26.49 from 26.20, and so we're stuck in this range, and we're right in the thick of the high volume node of last night. So it's not giving us any clues other than the fact that the market is currently accepting prices lower, and also that the market is anticipating trouble. Although buyers did step in. What are we expecting for today? Today, we're opening inside of the Wednesday rally, okay? And here again, very important area here. The key low volume node in this area aligns with the overnight low. It aligns with a multi-high area, 2619, and we've moved up. We've moved up 20 points from there. The expectation this morning is an open auction out of yesterday's range, inside of Wednesday's range. I'm looking for this to test lower, but ultimately I expect that this is likely to challenge the 2649 and then ultimately push back in. The extended target for scenario 1 would be yesterday's point of control, 2658 and a quarter. 2658 and a quarter brings us in line with the tariff news, and then I expect it to go sideways, tag that tariff news, and then finish sideways. That's scenario 1. Scenario 2, if we get an open test drive lower, I expect it to get tangled here at 26, 27, 28, bounce up, test the other side, and finish in the middle, accepting what was in the middle of the rally range from Wednesday. So that's scenario 2. The third scenario, because we're out of balance here, the third scenario is an open test drive lower. So we test lower and push up, and then we end up completely blowing through these the day type levels for a push into the point of control. The prior day's point of control. Now remember, this was a pretty balanced day yesterday with pretty good volume, and so there's a lot going on in here that the market's likely to test out. In that scenario, I expect that the market will push. If it does get a drive, that means there's plenty of energy there to take it all the way up to 65.50 and potentially breach this 72 on the way up. This is an aggressive buying scenario. Again, we ended up with a pretty good base since Monday. The market's had a good base since Monday. So if you listen to that Trader Bite on Monday morning and Tuesday, we as indicated, we had a really good base built on Monday, and the expectation is for us to continue higher and challenge that weekly high at 76. Okay? I want to remind you again, please take a moment and hit the like button before you leave. It is Like Friday, and that's all I have for you. Good luck. Hopefully you had a productive week. Hopefully you set some targets and maybe hit some of them. If not in profit, then in skill, in gaining skills. Good luck, and I'll catch you on Monday morning. Take care.